Hello, traders. Welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm here to give you the latest updates in FX markets. And today we're going to be talking about the US Core PCE inflation preview. I've done a video about this as well, but I wanted to break this down in a little bit more detail for you as it's a big data drop that has been eyeing up the markets today. We've obviously got a background of geopolitical tensions as well going on, and crude has declined almost 5% as geopolitical tensions appear to be more constructive, apparently. How much I believe of that, I'm not too sure, but we also have Nvidia earnings as well after the close today. So it's going to be super important day for the markets because obviously we've had a lot of pullbacks considering the especially from the AI trade point of view. So it's going to be, is it because there was those higher inflation expectations, but those have come off? Why are we seeing stock markets continue to decline? Because it's a bit of a bigger story than it is of the inflation picture in the US. So let's get straight into it then. I've got the preview up for today. Let me just change this to today and we can have a little bit of a deeper look at the pro-economic calendar here and what the pro-economic calendar is highlighting to us. So what do we need to see, or what is it today? Right, so it's Core PCE Price Index. What is Core PCE Price Index? Basically, this measures the consumption from consumers, right? So it measures how much people are actually spending within the economy. It doesn't take into account the energy costs, the food costs. It doesn't take any kind of volatile situations in like that. And it gives us kind of like the pure data of what people are spending their money on within the economy. Now, Core PCE is the preferred measure of inflation used by the Federal Reserve. So it's super important for us to know as Forex traders why we want to be looking at something like this, okay? Because it's going to matter to the Fed, the people that are controlling what happens in the economy, what happens with interest rates. So it's going to be super important for us to understand where their head's going to be at. So if we look at the Core PCE Price Index year-on-year measure today, it's looking that it's going to be forecasted at 3.3%. That is the same as previously. So it's expected to remain a little bit sticky. Now, if we do see that, that could be a little bit more bullish US dollars because it is showing that inflation or demand, it remains relatively strong, right? On the opposite of that, if we see a decline to 3.2%, that means that potentially demand isn't as strong and we're starting to see a little bit of a lower move. Now, if we see that coming in at 3.1% or even 3.2% below, then there's a good potential here that we're going to see some real US dollar weakness continuation, right? And that's all down to the fact that we're going to see inflation measures coming in a lot lower. And that's ahead of the speech by Federal Chair Warsh at the Jackson Hole Symposium, which starts tomorrow. So that is going to be something we need to keep our eye on for sure going into today. Any kind of inflation metrics that point lower is going to be US dollar bearish. Okay, so let's keep that in mind when we go check out some charts of interest. So because of that, we're going to be looking at the likes of gold. We're going to be having a look at the likes of euro dollar. So what I'm going to do is I'm going to break euro dollar from the top down, right? So we're going to delete all our drawings. We're going to have a little look at what is going on. So let's first of all start at the weekly chart. It's always good to do this just to give yourself a little bit of a refresher of where price is at. And I always monitor the weekly closes. I always monitor what demand is doing. So When we take a look at price of euro US dollar, we can arguably say that the market found these highs here at around about that 119 handle. Okay, so I'm just going to adjust that to 119. And we also obviously found support down towards the 114 handle, right? Down through this area here. Okay, so the market is telling us that we're trading within this zone. We found resistance at these highs. We found support down towards these lows. It was also previous resistance here, right? So telling us that this area of 114 is super important for price. Now we consolidated around that area, right? And then price has recently broken to the upside. So if I'm looking at this from a range perspective point of view, then my idea is that maybe price stays in the range, we head up back towards that 119 handle. We could also add in a few more levels. So we've got this kind of internal level within the range, right? Which was almost like the range highs prior to the breakout on January 26th. But 117, should we call it 118? I was going to go 117.75, but let's call it 118 and let's see how that looks. So 118 also is a decent level of resistance as well. So that could be an area where price comes in. Now let's go to the daily chart and let's have a little look at what the daily chart is doing. So we can clearly see from the daily time frame, price has made a double bottom, right, at that 114 handle. We've made and broken through that. We completed the pattern, consolidated around 115 and have recently broken out to the upside. Okay, now we're consolidating again towards another level of support. So on the daily chart, we can uncover more key levels. So one of those levels being around about that 116.50 handle, right? And we can see again in the past when we look left, remember, look left, price leaves clues. You've got all this resistance here, support, resistance in the past, right? So strong level of support in here. What else can we look at? Well, we have these 116 level. We've got this kind of cluster of support down through here where we had the most recent breakout. So we could narrow that down a little bit, maybe into sort of the 115.80s. But at the same time, you know, I like to use those psychological numbers. So maybe we'll go 115.75 for argument's sake. Let me just round that up to 75. I like using those psychological numbers because there was a study done and it showed that retail traders and most traders put their money or their stops around about whole numbers. And that's why the market can go and target these things. So that is what we want to be looking at. So when I'm looking at this, I think, well, actually, you know, the market has been trending higher. We're currently trading at the 116.50 handle. So there's a couple of ideas here for me personally. First idea is, what if the data comes out worse than expected? What if it comes out at that 3.2% or lower for the core PCE price index? Then I think that is going to be US dollar bearish. So I would expect euro dollar prices to continue to make its way higher, potentially testing current month's highs just above that 117 handle, right? Because this is going to be a big measure today for price, right? We can already see that the market is in this upward trend. Yesterday, we spoke about the idea that we're breaking kind of trend on this hourly chart, which could give us a little bit of bullish momentum to the upside, right? We were looking at this trend line break and we were saying that maybe this is the start of a potential upward move. Obviously, we need to see that confirmed, but you know, the 4-hour time frame at the moment is showing a big move to the upside during the open of London. So that is something that we can potentially keep our eye on going forward, is a move up into that 117 handle, which would be kind of like the highs of the month so far. So that could be if dollar is bearish. If dollar is strong though, and price breaks below the 116.50, let's say that we get a 3.3% plus, or maybe in the 3.4%, then that could mean that we've deviated to the other side. So we could see a break of 116.50, pushing prices down towards that 116 handle, where we can see all that kind of previous support has been held for price. So today is going to be very, very interesting. Let's go take a look at gold levels then as well, because gold levels are going to be something we need to keep our eye on. Gold currently pulling back. Okay, now if we look at the daily chart of gold, that is to be expected, right? Price has gone such a long way, and I'm expecting price to come back towards these key levels of support, right? So the market has been breaking higher, and we talked about this ever since we were down at this $4,000 level. We said that the macro is pointing to gold upside, and it was lagging behind. And as soon as it broke out of there, the market continued and has rallied over $700 now. So strong gold market here. Now, we are seeing a bit of a pullback today so far in the London session, but that's absolutely fine. If price continues to pull back, then there is a likelihood that we're going to continue to try and trade down towards key areas of structure. I've got the 4,590 level. I've got the 4,500 area as a potential support, and also the 4,450. Do I think price is going to get back there? I don't know. It's going to take something big, I think, for gold prices to push back down towards this area. If anything, I have more of what happened previously in mind, where price kind of ranges a little bit and then breaks out and continues higher. If, however, though, that PCE comes in lower, then those inflation expectations are going to lower. We're going to see yields naturally come in lower instead of this bond buyback situation. And we could see price find support at this 4,590 and see a move towards that $4,700 area once again. So those are my kind of levels and those key criteria I'm really watching for on euro, US dollar, and gold today, because core PCE differs very much so from kind of core PCE, and we can go and have a little look at how it differs. One of my favorite websites that you can go and have a little look at is tradingeconomics.com. And one of the cool things that I like to do here is, if you come down to the United States indicators, and we can look at things like the inflation rate, we can look at all sorts of things. So I'm going to click on the inflation rate right now, but we can come down to the side over here and it says Core PCE Price Index. Okay, you got the month on month and the year on year. I'm just going to click the year on year, and we're going to go for a 10-year outlook. Okay, and the reason why I'm showing you this is because we're not in the same situation as we was previously. Okay, so what we had in 2021 and 2022 was a core PCE price that moved higher consistently over a period of months. And in this time, what we saw was bond yields followed that, right? So let me see if I can try and compare. Let me see if I can get bond yields on here. US02 yield. Let me see. Let me just type in yields and see what comes up. Wonder if it'll give me the 2-year. Might not give me the 2-year. Might give me the US 10-year. We'll go with the tips, because tips are those inflation backed ones as well. So it's kind of like inflation minus current yields. But so what you can see here is the core PCE price index annual change, and underneath it you've got the 10-year tips, right? So 10-year tips basically is in inflation protected securities, right? So it is our bond yields minus inflation. So it's taking into account that inflation. Now what you can see quite interestingly here is that core PCE price index started to change. We started to get an increase in that core PCE. And then look at the 10-year tips yield, followed it about 4 months later, and the market then started to agree with it. Now let's add in another thing on top of this so that you can compare. So the one thing that I like to add in on top of this is the US, one second, is the interest rate, right? On top of that, because this is what spurs everything on. So look, inflation goes first, right? Then we have the changes in bond yields, right? You can see where my arrow is kind of starting from. And then we have interest rate changes, okay? Because what the Fed are looking for is persistent. Is this going to be persistent? They only know it's going to be persistent if they wait and they look further and get more data. That's how they know it's persistent. So back in 2021, when we started to see core PCE rise, we started to see a huge move here in the 10-year tips. We also then started to have a positive reaction from the Fed. We were starting to hike interest rates. But this all came to expectations, right, that the Fed were going to hike rates. How does that implicate the dollar, right? So again, let's try and add another thing on here. I don't know whether it will allow me to do it. Dollar index, what has it gone? Let's take off the tips. Let me take off the Fed funds rate as well, right? So now we're just looking at the core PCE and the dollar index, right? So look at this. Core PCE starts to rise. Expectations of rate hikes rise. Dollar starts to get supported. Dollar gets bullish, right? Now, recently, we've started to see that core PCE coming lower. And what's happened to the US dollar? Pretty much from those highs has lowered, right? So if we start to see a core PCE that starts to roll over, that is going to be negative US dollars, because they're going to start, the bond market essentially is going to start predicting that we're going to get rate cuts, or at least we're going to see rates on hold, which is against the narrative of what we've seen recently, where it's about rate hiking interest rates, all that kind of stuff, right? Now, let me just show you one more thing. And as a Forex trader, this is imperative to understand. CME Fed Watch Tool, right? This basically tells us what the market is, or where the market is positioned going into a Federal Reserve meeting. So again, I want to reiterate this. This is something I speak about weekly, right? And this is something that you should look at. We can see that there is a potential for no change to come, right? Let's look at a month ago, right? There was a 26.6% chance of a 50 basis points hike and a 55.3% chance of a 25 basis point hike within that month. So that's what? That's over 80% of bond traders expected interest rates to be hiked. Now, in a month, we've gone to 63.9% hold. So it's a clear shift in what has happened, right? That's why we're seeing gold in particular rally aggressively. That's why we're seeing US dollar coming in lower, right? So gold has a bit of a different backing as well, because obviously it has that kind of safe haven to it, which has been exposed recently, because we had the situation on Wednesday 19th where US Treasury Secretary Scott Bessent decided to double the bond buybacks. And he's doing that to try and bring long end yields down. He lost credibility in that, right? This is the biggest treasury in the world. He lost credibility. It's the world reserves currency. He lost a bit of credibility in that. So the dollar sold off, but gold went even further, right? Gold went further because dollar only sold off on the Wednesday and then halted since. Gold has still moved another $200 higher because of that, risk element that can the treasury be trusted now? Is it yield curve control? I don't think it is, but what is it doing? Is it trying to manipulate the market? So that to me is an interesting play as well. So we've seen a little bit of profit taking coming from there. Dollar on the little bit of the muted side today, a little bit weaker, which is something that I've been looking for to try and take advantage of. And if that core PCE does come in lower today, it will only extend that move lower. Okay, so that's what I've got for you today on the US Core PCE inflation review. I've also done a video on this as well. We've had more data since I've done that video, so I've tried to include a couple more things within this stream. But if you did enjoy this stream and you learned something new, most importantly, hit that thumbs up button, subscribe if you're new around here, and I'll catch you very soon.